Hey, welcome back. It's Jason Walter here. In today's housing market update, I'm going to give you an update regarding new home sales in the US. I'm going to also give you an update regarding mortgage loan forbearances as well as mortgage interest rates. So stay tuned. And by the way, if you're new here, welcome. I post videos about how this pandemic is affecting our real estate market. So I invite you to subscribe to this channel if you haven't done so already. And if you have subscribed, thank you so much for supporting the channel. Also, if you appreciate real estate market updates just like this one, please hit the like button and let's go ahead and dive right into the video. Okay, let me share my screen with you and let's dive right into new home sales in the US. And this is for September 2020. And this information was just announced yesterday at the time of this video. Again, this is monthly new residential sales in the US. And this is compliments of the US Census Bureau and the US Department of Housing and Urban Development. So as you can see here on this graphic, it really has a great depiction of what new home sales in the US have been doing over the past 5 years. As you can see, more or less, we had this kind of gradual upward trend ever since we hit this pandemic, and then new home sales absolutely plummeted. And then ever since around May of this year, new home sales have absolutely skyrocketed well above pre-pandemic levels. But they're starting to decline. I'm going to go over that here in just a little bit here. So sales of new single-family homes actually decreased 3.5% when you compare that to August. So it decreased 3.5% from the previous month, but I think this is the bigger headline, is that the increased 32.1% when you compare that to 1 year ago. So you be the judge of that. You know, is it a bigger headline that we had a dip in home sales this month compared to last month, or is this 32% number the bigger headline? And so this number here with the 3.5% going down, I would imagine that's due to the seasonal fluctuations that we have in the real estate market. However, we'll have to keep an eye on this to see if this continues to go down as we go into next year. But I anticipate this will probably continue to go down this year, as a lot of people don't want to move during the holidays. So the median sales price in the US for new homes only is $326,800, and the average sales price is $405,000. So let's go ahead and dive deeper into this. I also want to preface this by saying also a sale is not the same for existing existing home sales. So a sale for new houses is defined as when the new home builder takes a deposit or a sales agreement is signed. So on the existing sales, this is more of like a pending, because these are not actual sales. This is just someone has gotten into contract. Just want to preface that by saying that. So it's kind of more of a forward indicator of what we should expect next couple of months. For new privately owned houses sold and for sale. So let's go in here, because this goes over by region. And this is really interesting to see this. So this is seasonally adjusted, and we're looking at sold prices for the period, right? So United States, again, we're down 3.5% when you compare it to previous month. However, up 32% when you compare it to 1 year ago. However, there's a large amount of fluctuations when you look at each of the 4 regions that they report on. So in the Northeast, new home sales absolutely tanked in September, down 29%. And then year over year, they actually decreased as well, 5.9%. The only region where we had a decrease in new home sales in the US year over year. In the Midwest, down 4.1%, but home sales compared to 1 year ago, up 35%. In the South, about the same, down 4.7%, but year over year, up 27%. However, the West is doing its own thing. In the West, we're up 3.8% compared to the previous month. And then compared to last year, up 49.7%. So overall, up 32% year over year. All right, so that was new home sales. Let me give you a quick update on what we saw for existing home sales, because I made a video about this on the 23rd, about 5 days ago, that was announced on the 22nd. So let me just give you briefly a rundown of this, and then I'm going to go over mortgage loan forbearance update for you. So existing home sales in the US are up 9.4% from the prior month, and then up nearly 21% year over year. And the median home price in the US hit another record high of $311,000, and that was up 15% compared to 1 year ago. And this is even though total housing inventory is down 19% compared to 1 year ago. Check out my video from 5 days ago if you want to take a look at this at a more high level. So let's go over the share of mortgage loan forbearances in the US. And this is compliments of the MBA, or the Mortgage Bankers Association. So the share of mortgage loans in forbearance decreased slightly from 5.92% to 5.90% as of October 18th. And again, at the time of this video, it's October 27th. This was just announced yesterday. So according to the MBA, 3 million homeowners are currently in forbearance right now. And this is the big headline too. I've been talking about this a lot as well on my YouTube channel. The share of Fannie Mae and Freddie Mac loans in forbearance dropped for the 20th week in a row to 3.72%. So it's great to see that the loans that are backed by Fannie Mae and Freddie Mac have been declining ever since, or for 20 weeks in a row, down to 3.72, well below the average of 5.9%. However, Ginnie Mae loans, which are again are loans that are backed by the VA or the FHA, which require a low minimum down payment, increased 3 basis points to 8.17%. So we're approaching the FHA and VA loans to be almost 3 times as much or 3 times as high as Fannie Mae and Freddie Mac. And I talk about this a lot on my YouTube channel. It appears that the homeowners who have FHA and VA loan seem to be more affected by this pandemic than those who have a conventional loan by Fannie Mae and Freddie Mac, for example. So by stage as well, 25% of total loans in forbearance are in the initial forbearance plan stage, while 73% are in a forbearance extension, and the remaining 1.84% are forbearance re-entries, meaning someone was in forbearance, exited forbearance, and then got back into a mortgage loan forbearance program. And I went over this a previous video about 3 days ago that we saw a huge drop in the mortgage loan forbearances from about 2 weeks ago, actually. And Black Knight has a great depiction of what we've been seeing on active forbearance plans by loan servicer. So beginning in March, or the end of March 24th, was basically around the time that the CARES Act was passed that allowed people to enter into mortgage loan forbearance where they didn't have to pay their mortgage anymore if they had a federally backed loan and are experiencing a financial hardship due to COVID-19, right? We all know that. So I want to show you here is that Fannie Mae is right here, this green line. FHA and VA, those are those Ginnie Mae loans. They were lower than Fannie Mae and Freddie Mac for quite some time, but as you can see here, Freddie Mac and Fannie Mae have been decreasing, whereas FHA and VA have been more or less steady, but more recently have been increasing. So right now, the FHA and VA loans in forbearance are at a higher rate than Fannie and Freddie, for example. And of course, a quick reminder here, the 30-year fixed rate mortgage, according to Freddie Mac, averaged 2.80%, and we're currently at a record low for mortgage interest rates. And this dates back to 1971. All right, let's go over quickly the S&P CoreLogic Case-Shiller U.S. National Home Price NSA Index. I could have sworn they could have a shorter name for this, but this is basically a composite index of single-family home prices in the U.S. that covers 9 U.S. Census divisions, and it's calculated monthly. So let me go over that here with you just a little bit here. So this is what just announced today at the time of this video, and that they state that this index increased to 5.7%, or increased to 5.7% in August. And so let's go over this by region. So again, this covers all 9 U.S. Census divisions, and they also report this by division too, or by city, I should say. So Phoenix, Seattle, and San Diego reported the highest year-over-year gains among the 19 cities. For whatever reason, Detroit was not included in this monthly index. They had some issues with reporting this month. In any case, out of the 19 cities, Phoenix, Seattle, and San Diego had the highest gains, where Phoenix actually led the index by 9.9%, and then Seattle had an 8.5% increase, and San Diego had a 7.6% increase. It also says that all 19 cities recorded higher price increases in the year ending August 2020 versus the year ending July 2020. And that is today's housing market update. If you like this video, please hit the like button. I greatly appreciate that to help support this channel. Also, if you haven't subscribed already, please subscribe to this channel and join the family. Hope you have an awesome day and look forward to seeing you on the next video.